Hey, it's Sasha Evdokov, and thanks for joining me. In this video, I want to share with you how you can make money from the stock market if your stock is moving sideways or not moving in any direction. Typically, you do this by selling options, and it's through options where you can make money from a stock moving sideways. If you're just buying or selling shares of stock, you usually can't make money from the market if your stock is just moving sideways and not doing anything. You need some kind of movement to the upside or the downside to capitalize, whether on the long position or the short position from your stock trade. Now with options, you get a lot more flexibility because you can capitalize if the market is just moving sideways and not doing anything. Or if it's just kind of wiggling around sideways. You can even make money if the stock is going up or the stock is going down. So the way you do that is you sell option premium. And there's a few different strategies and they get a little bit more complicated. So option premium is like selling insurance. So if I'm selling health insurance to you, over time, you have to continue paying for it. So meaning as you progress your life, you have to constantly pay for it because you as a person or me as a human being will deteriorate over time. And if you buy your insurance premium sometime later when you're 70 or 80, it's going to be more expensive than if you buy it when you're 20. So when looking at this is what option premium or options kind of do. And if you sell option premium, that's in essence what you're doing is you're selling premium on a stock. And that's how you can capitalize on it moving sideways. So I want to share with you a couple strategies. In this example, you're looking at a calendar spread. And the calendar spread, the way it works is you're selling option premium in the front month, and then you're purchasing protection in the next month out or a couple months out. So that's what you're doing with premium because the one in the front month is going to deteriorate quicker than the one in the back month. Think of this as like a 80-year-old person will approach death much sooner than someone when they're 15 years old. So that's kind of what you're doing is you're selling the front month and you're purchasing protection for yourself for the later months. So as this one expires, this one also expires, but it's a lot slower. It gives you a little bit more time. So if the market doesn't do anything in between these points, you slowly make money as the line rises up and up. So in the next example, in this example, what you're looking at is an iron condor. And an iron condor is basically just two contracts or two spreads actually on both sides of the stock. So you're basically selling one vertical on one side and selling another vertical on the other side, creating a spread. So in this example, you're saying like, I'll protect you if, I'll give you coverage if you're 80 years old and if you're 20 years old, but if you're between 40 and 60, you won't be covered. So think of this as kind of only selling to the extremes your insurance premium. And that's kind of what you're doing. So if a stock is at 500, you might sell some option premium at 600 and at 400, but right around between 450 and 550, you'll be profitable because over time, things deteriorate. And of course, some of these strategies, they are more complicated than what I'm going into, but it just gives you an idea of what things to maybe research and learn about a little bit later. The final thing I want to share with you is a butterfly spread. And what a butterfly spread is it's in similarity to like an iron condor. Everything is in 1 month, it's in the same month. And what you're doing is you're selling just right at that money or right around the money where the stock is being traded, two contracts. So again, you're selling option premium. And then you're buying a leg of protection on one side and also one on the other side. So again, it requires a minimum of 4 option contracts in order to create this spread. So this contract is a little bit quicker option deterioration than a butterfly. So you can see that the profit picture looks similar, but it just deteriorates much quicker. And you can notice this by the theta that's available on this one. So in either case, these are a couple of strategies that you can use if the market is moving sideways when trading options. Now again, I don't recommend you jump into options right away, but it gives you some idea, some insight of what to do if the market is trading sideways, or how you can profit from the market not doing too much. So you can constantly collect this premium or option theta as the market is standing still or just slightly moving. And you do that through options. So I hope this video was insightful to give you some little knowledge about options to maybe get you to start thinking more about what's possible out there in the market, what's possible to trade, and how you would go about doing it. Of course, you do need to brush up on some of these strategies much more because they are more complicated than just putting on the trade and letting it sit and expire. But it gives you some idea of what's possible and what you can do in the future as you gain experience. So thanks for watching. If you enjoyed this video and you want to see more videos like this one, and you want to see the stocks that I'm watching in the current market conditions, then go ahead and click this link right here. When you click this link, enter your name and email address on that website and you'll get my rapid recap videos where I share with you some stocks that I'm looking at in the current market conditions by the charts. And if you want to speed up your education in the market, if you want to take your trading to that next level, maybe you just want to save yourself a lot of time on research, then take a look at some of my stock trading courses at tradersfly.com. Thanks for joining me. I hope you found this video helpful to some of the strategies that you can use if the market is just moving sideways and not going in any particular direction. Now again, like I said, you will need to brush up a little bit more on your study about options, and you should have some experience trading in the markets before you get into options because they are a little bit more complicated, but it gives you some insight to what's possible. Thanks again, and remember to do what you love, contribute to others, and most importantly, live life abundantly. I'll see you next time.